for today's trending report, coming to you in August of 2024. What an incredible month it's been. What an amazing time we live in. And to be an investor in the stock market during these times is exciting. What we worry about when we talk about trending is we worry about where the market has gone and is there enough momentum for it to keep moving in the same direction. And so as we look at investing in the stock market, it's always important to remember our time frame. As we talk about trends are not things that happen quickly. They're not things that last for a very short amount of time. A trend, for the most part, is something that builds and slowly loses steam. And so as we're talking about the stock market at this point in our year, not just the stock market year, but the calendar year, the events of 2024, it's important to remember that as we look at our long-term investments and as we spend time with our advisors talking about those investments, that we have to remember that we planned for this. Now, maybe not the exact and specific events of the last couple of weeks or last couple of months, but we plan to be in this for the long haul. And so when we look at our long-term investments, it's important for us to recognize a feature of the stock market that often people are afraid of. And that feature is volatility. It's so important to remember that volatility is the cost of long-term growth. We've got to get through volatile times in order to experience the growth that comes from them. Now, volatility is not a trend. Volatility is something that happens along the way.
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a series that aims to focus on the trend lines rather than just the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Now, what we're looking at here is the trailing 12 months of the S&P 500. Now, first of all, let's talk about the trend. The trend, you can see, has been positive. We started way back last August in a lower position than where we are today. And you can see that the trend is an upward trend and a positive one. But what I want to focus on is the volatility that we see along the way. Look at that spot in October of 2023 into November. We see the market drop. Pretty decent drop. But what we see is that V recovery to that drop. That's volatility. We see little bouts of volatility along the way up, all the way to April of 2024. Then we see a drop. We experience some volatility. We start to come back up and we see the recovery by the middle of May. And as we continue to recover, we look at what we've seen the last month. Now, what a lot of people will do is tie in. So looking at the trailing 30 days, the last 30 days in the stock market, what we see here is a very short amount of time, a piece of that volatility. And what a lot of people will do, based on current events, based on what they're hearing in the news or what they're seeing in the reaction to some of the stock market losses, is they'll want to react to this volatility. And they're scared of this volatility, as opposed to recognizing this volatility as a feature of the stock market. And so when we talk about risk management and we talk about trending, risk management is not avoiding all loss. It's the attempt to avoid catastrophic loss. What we want is a risk management system that takes into account volatility and that allows us to experience the volatility in order to experience that feature of growth that comes with some volatility in the marketplace. And so when I say this is what we planned for some volatility. This long-term money, when you sat down with your advisor and you talked about your goals and the purpose of this portion of your portfolio, the purpose was for growth. The risk management was to hope to keep more of your money as the market experiences a downward trend. It wasn't meant to avoid volatility, because if you attempt to avoid volatility, well, then you're going to give up a lot of the growth that comes as a feature of long-term investing. And so, it reminds me when my daughter was younger, we went to Busch Gardens on a spring break, and she experienced her first roller coaster. And, she really ran the whole gamut of emotions. She loved the speed. She didn't care for the turns. There was some jostling about. And when we got done with the ride, she said, "Dad, that would have been great if there weren't so many hills." Well, that's a feature, isn't it, of a roller coaster? The feature is the drops and the turns, and depending on what coaster it is, some of the inversions. That's a feature. In order to handle those features, you're strapped in. Depending on the roller coaster and how dangerous it is, you can get strapped in pretty tightly. But you can't have a roller coaster without the dips. It's the same thing with long-term investing. As we sit here in August of 2024, we've had some incredible headlines over the last month. And no doubt there will be more as the year goes on. What's important to remember is that a trend takes time. The other thing that's important to remember is long-term investing success takes time and it takes discipline. That reacting to volatility, like we saw in the last 30 days, like we'll see, no doubt, over the course of the next 6 months, maybe even longer, of course, the market has that feature of volatility. Now, volatility is different, of course, than a downtrend. It's different than a drastic correction in the market. Risk management is meant to help us avoid some of those catastrophic losses in the stock market. But again, we need to have a long-term investment plan that allows us to experience that feature of volatility in order to receive the growth that's intended for our long-term investment strategy. And so just like a roller coaster isn't a roller coaster without the dips and without the drops, a long-term investment plan is not a successful plan without accepting some volatility. And so as we sit here today, the overall trend has still been positive. We've seen some volatility over the last month, and we expect to see more. But thankfully, we have an unemotional, disciplined investment approach that will allow us to stay in the seats of that roller coaster, safely experiencing the excitement that is the stock market. This is Kevin Roskam with USA Financial. As always, thanks for your time and thanks for your business.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.